The harsh truth that big TV on Wall Street will not tell you. Today, we got lots of new charts. We got the Fed. We've got geopolitical. We got all kinds of stuff to talk about. And I know it's not a Wall Street theme because we are here in beautiful Bethany Beach, Delaware. So sit back and let's get started. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. I am a practicing financial advisor working with both individuals and companies. I do not follow the Wall Street mantra of buy and hold. So if you're looking for a fresh opinion, please do consider subscribing or clicking below for additional information. Today's agenda, we're going to go through the big charts. We got lots of new stuff to look at. Treasuries screaming, telling us something completely different than the overall market. What keeps me up at night? That ugly truth that lies below. Tweets of the week, what's on my radar, game plan, and before we leave this beautiful site in Bethany Beach, let's go back to the big charts. All right, first up, last video had a ton of likes, but we had some dislikes. Whether you like or dislike, please comment below, and also let us know if you're bullish or bearish. First, we have our daily chart. I want to remind you, I'm not making moves on this unless I'm getting in and out of an individual stock. Why? Because it can flip-flop. We saw it. Last video was negative, and quickly we went positive. So I look at this as a guide going forward, and also a couple things. One, volatility index continues to hug that 15 line. I'm not buying until we break, and I mean break below that. Okay, you see that RSI has moved up, momentum's moved up, but again, to me, when I look at this chart, I am still, I would say, neutral with a negative bias. But let me zoom in a little bit on a new chart I created this week. Why? What's different here? A couple things. First off, last week, look at this. 13 Fed officials spoke, and look at the market. Well, this week, the week before the Fed day, is called a blackout period. So look what's happened this week. The other thing is, I don't know, hopefully Andrew can zoom in here, but on Monday of this week, we had a reverse candle. You see it go up high, reverse down, and then close down there. What that shows me, and then you look at volume going down, you show exhaustion. Exhaustion of buying, so not surprised. So this latest Powell put has not done too much, and another reason why I have a negative bias on the short term. Next, we've got our weekly view. Any change? No. Why? Because we're still negative on momentum. Yes, we're above the 40-week average, but again, same thing here. We're looking to form a head and shoulders. Looking to, has not happened yet, so we continue to watch that. You know, year to this week so far, this is Friday morning, we're going to end up probably negative based on today's future. So right now, we are still negative on the midterm. Long term, as you would expect, negative. What, if anything, has changed? Nothing. This is my biggest issue. Momentum on the long-term chart is still negative. You got that negative divergence up there. So right now, I do not see myself adding. So we've got neutral, we've got negative, negative. Now, one thing I want to show you, I mean, not surely a new chart, something new I'm showing. I always use the S&P because that's the most seen on TV and everything else. But it's 500 companies, it's cap weighted, right? So sometimes you have to look a little bit deeper. This is the NYSE, so the broader index 2,800 companies. This really is going to show you what's happening underneath. No surprise, 2018 highs, but then you get a lower high. Lower high, and again, we have paused here. So when you look at this, we're not breaking out like we have on the S&P 500, because it's more broad. That shows you the broad weakness of the overall markets. Next, let's take a quick look at treasuries. What's happening here? I'm going to show one chart. One is Look at this decline. I mean, 1.84, okay, on your 5-year, 1.83 on your 2-year, both below the Fed rate. We'll talk about that in a second. And the big thing, on yield spreads, up to 0.25, but we have gone negative, okay, down here. Didn't update, we're down to minus 0.09. Negative yield curve. So that is your 10-year minus your 3-month. That's our first negative call there. That's a concern. Today we opened up about 2.06 on treasuries. Again, treasury market is screaming something different. Next up, what keeps me up at night and the ugly truth. Okay, we're gonna go between a couple charts here in PowerPoint, back to the overall charts to show you some of these things behind the scenes, okay? First up, again, this is manufacturing, 52.1. You can see that trend line, not good. Global PMI is in negative, is in contraction, which is below 50. That's an issue. This week, this is what you're not hearing on big TV. Why are we positioned where we are right now? We'll show you in a second. But slow growth, slow earnings, deflation, okay? This is what we're seeing. The Fed's looking for inflation. All of these things, here's your PPI and CPI came in negative this week. So there they are, our doves, right? Constantly pushing up this market. But are they dovish enough? Interesting, right? So the Fed comes out last week and says, we'll do what it takes. Of course, the market gets gaga because you get an ugly unemployment, and bad news is now good news. Stupid, right? But the bottom line is, after that, there is a 89% of, Andrew, go in here. This shows you the percentage of an expected rate cut next week. 89%. So when you look at this, an 89% chance, personally, I'm going to be surprised if they raise. I'm going to show you why in a second. But let's hear something here from our friend Larry Kudlow.
Wow. Low unemployment, high jobs, high wages, big consumer confidence, major productivity, and no inflation. It's totally awesome. We're killing it on the economy.
Ah, yes. The president has his cheerleaders, doesn't he? So you look at all that excitement of what's going on in the market. Why would they cut rates right now? This is a new chart, little bit busy, so follow me here. On the top line here, this is your S&P. This is the Fed rate in purple. So let's go back in the past. Back to 2000, we were at 6% on the Fed rate. They paused, just like today. They started cutting. What happened? Well, the market followed down. We go into the last crash, 5.25. They paused, just like today. You can see your pause right there. And then, of course, the market came down. Now, let's also look at unemployment, right? We're at 3.6%, the lowest since the 60s. 4.75 and 4%. Why would we cut rates when things are looking this good, except what the president's looking for? And again, on a 10-year, I have 2.13. I forgot to update it. But again, we're going to open up at 2.06 this morning. I look at this and go, why would they raise rates right now? They have 2.39% versus 5.25 and 6. They need that ammunition when they're really going to need it. So let's look at a couple other things real quick. Here's a new chart. So what does the Fed do? Well, new chart went back to 1995, okay? So what do we have? 2003, 13 rate cuts. And oh, by the way, as the market goes down, how effective were they? Not so much. How about 07, 08? 10 rate cuts. Pause, look at this, take a picture. And what happened? They started and the market continues to go. Shows the Fed is always behind the 8 ball. And this is what concerns me. All right, last up, industrial production. Classic. Roll over, market goes down. Roll over, and look where we are now. Another thing that concerns me, we are slowing. How about the other thing they never talk about? We're looking live. I sound like Brent Musburger in the 80s, right? This is the debt clock. 22 trillion 375. Look at that sucker move every second. How ugly. USDebtClock.org will give you all the stats. It's not pretty. But let's now move on to tweets of the week. All right, next up, I'm going to say Michael G because I don't want to butcher his last name. 10-year Treasury yield is now less than the Fed fund rates, what we spoke about. The last two times this happened were just prior to tech bubble bursting and the financial crisis. Next up, we have Stock Cats. Yes, big follow on Twitter. Links below to both of these. Recession fears sent stocks higher today as weak economic data virtually guaranteed a Fed rate cut. Hello, bad news is good news. The year is 2020. The U.S. economy is in a recession, but stock market continues to reach all-time highs. Obviously a joke, but that's what's happening right now. Next up, what's on my radar? Run out of time, so I want to be quick here on oil. We got out of oil right about there. Okay, not at the top. Had we gotten out at the top, it's down about 24%, but it's down about 20 right here. Oil, have a bounce today because of this tanker that got exploded and all that. So, but we don't like oil in this part of the cycle. The other thing, you look at volatility for oil, 41. Above 30, we're not near it. So next up, what do we have? A lot of talk here. Consumer staples. I added this about a month ago in our last video. We bottomed out and have seen a real nice push up. Again, these are the kind of sectors that are working, late cycle sectors. And we've had a lot of questions about our old friend, Mr. Gold.
I love gold.
And you're seeing a lot of people right now that are saying that gold is a big position. A couple articles yesterday. So here's the thing. We've got about 5% in gold, not ready to add. There it is, 1350. Look for that. That's going to be a long-term breakout. 1350, we're setting up perfectly. Looks good. Up 1% this morning with rates low. Gold loves low rates. Okay, so we are here looking to probably add 5% if we turn in this market. Let's wrap things up with fear and greed. All right, so here we are. We're going to wrap things up. Fear and greed calculations are below. 39 this week, up from 24. Again, indicators neutral with a negative bias on the short term. Our mid and long term are negative. Be careful out there, folks. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.